Hello and welcome. My name's Liz Norris and I'm from the Voyant Training and Support team, and I will be your host for this webinar today. In this 30-minute webinar, I will demonstrate how to enter details to build a simple cash flow plan. We will look at features and functionality along the way, including what the timing screen is used for and how to add, edit and delete events, goals and stages. Okay, let's get started. So if you haven't already, then you should actually sign up for a free trial with Voyant at planwithvoyant.co.uk, and you'll see the free trial button there. If you already have login details, you can log in here, put your username and password in. You will then see plan and you will choose go to AdviserGo. Other than that, you can also go to the planwithvoyant.co.uk and then do the suffix, which is /AdviserGo, and this will take you straight to the login and the home screen. So let's get started. So I'm in my home screen now, and to create a new case, all I'm going to do is click on the plus button in the bottom right-hand corner, and I click Create Client. Here is where you add the basic details for your primary client. I'm going to add Jane and her date of birth. And this is where you can also choose the gender and the country of residence, and also the retirement age as well, that your client says they wish to retire. And then quite simply, you click on Done. And this starts to bring your plan in. When you first open Voyant and you start the client, you will always come to Dashboard. This is the engine room where you add new items and edit existing ones. So the first thing you should do is add all the people into the plan. So now I'm going to add Jane's spouse. So again, click on the plus button in the bottom right-hand corner. And now I'm going to choose people from all these tile options here. I'm just going to add John's name in there. Okay, gender and retirement age as well in there, and click Done. You'll notice how it all updates as soon as you put anything in. So I'm going to stay in the dashboard now and talk about what's already in here. So let's first of all look at plan settings down at the bottom. Voyant is pre-populated with settings which are all editable. These are your assumptions and they set the defaults for a lot of things in the plan. So what I'm going to do in this inflation and growth rates, I'm going to change my savings growth rate to 0, and I'm also going to change my investment growth rate to 5. What I'm also going to do is look at my fees and taxation in here and change my fee rate. So for my cash savings, I'm going to change that to 0 because that's quite common. And I'm just going to check what fees rates I've got for my investment accounts, and I've got the 0.5% on here. So what happens in this case then, if I just go back to my inflation and growth rates, I've got the growth rates for my investments, the gross growth rates of 5% and a fee of 0.5. So my investments, when I put them in, are going to grow at net at 4.5%. I'm just going to click on Done now to save those changes. So what else do we have in Dashboard? We also have carryover assumptions. I'm just going to click on that to expand what's in there. And you'll see the things that you can put in there, and that's where you can model things that have happened prior to the start of the plan. So you can add in things like the lifetime allowance protections and how much lifetime allowance they've already used. And also, particularly for widows and widowers, you can put in the carry forwards in there. Now I've not changed anything here, so I'm just going to click on cancel to get me back to the dashboard. What you will also see is that we've got a couple of savings and investments accounts. It looks like that we've already got added. If I just expand those, these are sweep accounts. These are set up automatically. Voyant uses these to sweep funds from, say, asset liquidations or windfalls if the software hasn't got instructions to deposit them elsewhere. These grow by the savings default rates in your plan. So remember, I've just changed those to 0. You are able also to change the growth rates at an individual item level too. The other thing that I'm just going to show you whilst we're in the dashboard is if I click on my head and shoulders in the top right hand corner and then click on preferences, one thing I urge you to do is to switch on inline help. These are mini help topics that you can see whilst you're working in a plan. So now I'm just going to move to timeline. We consider the timeline as the framework for the plan. The timing of everything in Voyant is based on events and stages. So anything that happens in a particular year needs an event. This is also a nice place to bring your clients to show the key life events over time in their plan, and it personalizes the plan for them. Some events are added automatically, and you can see these already on my timeline. So we have the plan start event, we have the umbrella event. So these are the umbrellas where they're jumping off from working life into retirement. And we said when we first inputted the details here that they are at their relative age 65. And then we also have the plan end, the mortalities of your clients in here as well. You can move these as well, depending on expected life expectancy. So to edit this, you can just click on the event, and we've got the edit timing section at the bottom. You can move using the slider or the scrolls from the years and the ages as well. So you can do that. If I just click done now, you can see that Jane's mortality has moved to 95. And to bring it back again, I'll just click on it and I will again just edit it and click done in the top right hand corner. We have some key events that we're going to add to this timeline now just to show you what you can do. So what I'm going to do is add a later life event where in a few moments I'm going to use it to step leisure expenses up and down, and I'm going to add this in at age 75. So I'm just going to click the plus button in the bottom right hand corner and then click on the event tile, and then I'm going to name it as, I'm just going to call it later life. I'm going to keep the owner as Jane. You can only have one owner, but that doesn't matter because events are literally place markers or flags in the sand. That's all they are. We add values to them later on. And then I can pick a different icon if I want to. I might just pick on that one just for the sake of it today. And then on my edit timing, I want this to go to age 75. So again, I can use the slider or the scrolls from the year or the age. So let's get up to age 75. Instead of clicking done this time, which will say this for me, I want to add another event. So I'm going to use the option next to that, which is a down arrow here, which is in for everything though you want to add things. And I'm going to click on that and do save and add another. So I'm saving and adding another event. So what I'm going to do for this one is I'm going to add an event for when we're going to put in a new kitchen. And again, I'm going to pick another icon. I'm going to pick the remodel here. And Jane and John anticipate that will be done in the next couple of years, so probably around about the age when the 45. So let's just move that to there. And now, because I've added in all of the events I want to add them in, I'm just going to click done now. I don't need to do the save and add another. So as I said earlier, we haven't actually assigned any value to these yet. The cash flow hasn't changed. They are place markers, just mark the timing of something that's going to happen. Whilst we're in the timeline screen, I'm going to add in something called a goal. A goal, for any other word, is a trackable expense. It's up to you, and we'll show you about expenses in a few minutes. It's up to you what you categorize as goals or expenses. I like using goals for future ambitions rather than they have to spend this. A goal can be something like a one-off, like I'm going to do now for this new kitchen, or it can be ongoing, like a retirement spending goal. So how do we add a goal? You click on the plus button in the bottom right-hand corner, and you click on the goals tile here. Now you've got different options. The one I'm going to choose this time is a milestone goal, which is a one-off goal. And I'm just going to add the details. I'm going to have the owners as both Jane and John, and I am going to call this the new kitchen, and I'm going to have it as an amount. Now, handy little trick here, I'm going to put 30,000 in. I just add 30 and then click K on my keyboard there. It adds the 3 zeros in for me. You can have the priority of goal as what you want. Give it as a basic goal or a leisure or a luxury goal. I'm going to keep it as basic. Now what I have to do once I put in the basic information is click on timing, and this is where that event comes in. So it automatically has defaulted to retirement, but I don't want to do it there. I want to have this milestone goal, this expenditure here when I said that timing was going to happen, that event was going to happen. So I basically can drag and drop that expense occurs up here into that box and then click on done. Now we've done this, it will take us back to the dashboard. Now you can see here, I've only put the goal in, so there's nothing else happening on here. And there's a nice big spike on my cash flow chart here. And this is the expense, this is the goal. And if I just hover on here now, you can see that I'm making no progress because I've not put any liquid assets or income in or anything like that. You don't have to go back to timeline to do this. If you wanted to move that goal somewhere else, and it's the same with any events on the timeline, you can just click on the event here in the dashboard. It will pop up, you click on it again, and then you can make the changes that you want. So if I just move that up to say 53, then click done, you can see how this spike will move on the dashboard. So that's all you need to do. You don't have to go back to timeline to change events. You can do them from the chart. So I'm just going to again just move that back again to 48 and click done. So you can see with this how easy it is to change things and edit things in your plan. Now let me go back to timeline here, just to show you how to do some things. So we've got all these events on here now. If you wish to delete an event, you can do. You would just click on the event, and if you can delete it, it will show the trash can in the top left-hand corner. And because I've added nothing to the event, I've not attached any value, any savings or expenses or goals to it, I can at this moment in time delete that event. If I go back to the new kitchen one and click on that, you'll notice it doesn't give me an option, and it tells me that this event affects the timing of one item. And I will click on that and it will show me what item. So to be able to get rid of this event, I have got to go and edit that goal. So that's how these things work. What we can also do as well for a little bit more personalization is you can change the names of the stages. So I'll just show you how to do that. So rather than the stuffy pre-retirement, let's just click on that. So all you need to do is click, and I might call it, say, working life. And then just click done. So you can see how it's changed the name. And the other thing I can do is add another stage. Now to do that, I will add another stage between two events. That's what you need to be able to do it. I'm just going to click on the plus button. You'll notice the plus button comes in quite a lot. You click on stage. It will ask you what you're going to call the new stage, and I will call it later life. And it asks me about the timing. So again, this is very similar when we looked at the timing for putting that goal in. I will literally drag and drop when I want it to start, and I can also drag and drop when I want to end it as well. However, I'm just going to show you another way to add how you would get an event into that box there that says stage ends or expense ends or whatever it's going to be. You can move on to the list of them as well. So I'm going to click on list, and you can see that's all about when I want my stages to start, and this one here when I want my stages to end. So I'm going to now click on Jane's mortality, and if I go back to actually look at the timeline itself, you can see that it's done it for me. So you can either drag and drop, or you can use the list to choose the event that you want to add into one of the boxes here. Now to save that, I just click on done, and now I'm going to move back to the dashboard. What I'm going to add in here now is more expenses. I like to add expenses and goals first because I can see what's going on in the plan and then start adding in the income and the savings, etc. So I'm just going to add a few things. You'll get used to seeing how these are done. So plus button in the bottom right hand corner. Now I'm going to click on the expenses tile. And then I'm going to click on a multi-year expense. And all we mean by multi-year is it's more than 1 year. So I'm going to click on that and I'm going to call it their household expenses. And I'm going to give the amount as 30,000. And I'm going to keep it as a basic one. That's my priority in here. It's not a leisure or a luxury. The basics are really, things, your non-discretionary spends. Now, let's look at the timing on the left-hand side. The default is it will go from the plan start to mortality, but you can edit these like I showed you earlier when we were doing the stages and the goal as well. So you can do that. Now, I am going to add another expense. So I'm going to use the save and add another option. So I'm now going to put in their leisure expenses. So I'm going to use my priority here and class that as a leisure expense. I'm going to have that as £20,000 initially, but I'm going to do something else here as well. So if I go into timing at the moment, that shows me that this expense, this leisure expense, is going from the start of the plan right down to mortality. But at later life, Jane and John anticipate that they probably won't be spending quite as much on their leisure expenses. So they don't intend to spend the 20,000 throughout, and that's what's happening at the moment. So what I'm going to do is use something called the step function, and this is a great tool. You can use it to alter the value of expenses, change growth rates when we come to look at investments, or increase or decrease contributions to investments at a future event. And all you need to do for a step is to have an event of where you want to make that change, where you want to make that step in between your start and end event. So let's do this. I'm going to add a step. And it's going to ask me what I want to do. So actually, I'm going to reduce that £20,000 expense to 10,000. And when do I want to do it? Timing's always important. I want to do it here at later life. So I'm going to drag and drop that into there. And now I'm going to click done for the step. And you can see it summarizes the changes I've made. That at later life, I'm reducing to 10,000. And now I'm going to click done. Now this will update, and you will see it update on the cash flow chart here. So you can see my expenses here and then a drop there as well. Okay, I'm going to add another one. Perhaps I shouldn't have come out. I should have done save and add another, but I wanted to show you this first. So I'm just going to add in another expense. So plus expenses again. Again, it's a multi-year expense, but this one is Jane and John want to start buying a car in 2024 and buy that car, a new car, every 5 years. So let's do this now. So I'm just going to call it a new car, and it's going to be, let's say, 10,000. Okay, I'm going to keep it as, actually I'm going to change it to a leisure expense for this one. And I'm going to go, first of all, I'm going to go to timing. Now again, the default is it goes from the plan start to mortality. But what I want to do is start this a little bit later. So I said in 3 years' time. Now I've not got an event already, but we don't need to go back to timeline. We can create an event on the fly. So all I have to do is pick the year when I want this one to start. So I'm just going to click on that year there. And it brings me to a very similar screen to when we added the events in the timeline. I'm going to go new car, start purchases, and I'm going to pick the car event there. And what do I want to do with this? I want to set this as my start event. So look at that now. It's starting here and it's going to go on to mortality, which will lead to there. But one thing I did say is that they want to do this every 5 years from this start event here. So what I do now, I will change this frequency at the bottom to 5. And now I'm going to click done. So I've added all of those details in there. And now we have a full expenses profile. As I say, I like to put the expenses and the goals in first because I like to see this profile. And what you can see here, you can see the ups and downs of when I'm doing that car expense every 5 years. You can see they're going up gradually because we're increasing them by inflation. And what you can also see is a blue and a black line. The blue line is my basic needs, my basic expenditure. So anything as I categorize as basic, and also when I come into it and add the income in there will be things like your income tax. And then we've got the black line, which is my total need. This is all of their expenditure. And when we come to it, this will also be the contributions that they're doing to, say, savings and pensions, etc. So now let's add a bit more colour into this and a few other things, and I'm going to add some income into this plan. So again, just to add anything new, click on the plus button, and this time I'm going to click on the income tile, and I'm going to put some employment income in for Jane. I'm going to have her working for ABC, and I'm going to give her a salary of 75,000. Again, just to go to timing, you will see that it automatically, the default is it will go from the start of the plan and assume it's going up to retirement. Again, this is editable if you want to. Now, because I'm going to add an income in for John, I'm going to click on the down arrow and use this save and add another again. It's really, really helpful and useful. So instead of having Jane, I'm going to have it as John. So you just go in the drop down there to change. I'm going to have him working for CDEF Limited, again employed, and having him earning, say, £60,000. Again, it will go to the timing and just go up to his retirement. One thing I should mention here as well is that it will grow this income by the growth rate that's come through from your plan settings. Again, you can edit this on this individual basis. So I could change this to 1% and only John's employment income will then grow at 1% per annum. Okay, I now click done because I've added both of those incomes in. Now look how the chart has changed. I'm in the cash flow chart here and look how it's changed. One thing you will also note here is that the blue bars, they represent the inflow of the employment income, and the blue bar is going over my black line. This is assuming that there's some surplus income. You can see it there as you hover over it. It says surplus income of 45,678. The default in Voyant is that surplus habitual income is assumed spent. Okay, and you can see that here. You can change that default if you want in the dashboard, plan settings and calculation settings. So what we can also do is look at the year view here. So I'm just going to click on that year view tab. And then this gets us a whole new level of detail. And you can see there, I'm in the first year of this plan because that's where my slider is at the moment. And that's the year that's highlighted. And then you've got cash flow and it shows me exactly what my employment is coming in. Okay, I'm just going to click off year view for now. It'll take me back to add a few more things in here. And I'm going to now add in, I'm going to go on the plus button and add in the savings and investments. So I'm just going to add a savings account in. I can have it as sole or joint and a savings account. And I'm going to call it there rainy day fund because I'm going to show you what I'm going to do in a moment, and I'm just going to give it a balance here of £20,000. Okay, you can see that the fees rate has come through from my plan settings that I altered, and also the interest rates as well. Okay, I'm just going to add this in at this moment in time, so I'm just going to click done, and then I'm just going to show you what's happening. I'm going to click on detail to get a little bit more detail up here. What you'll notice is, so in any given year, all the expenditure is tried to be paid for, first of all, by your income, your habitual income. And then when that can't happen, the software will go and see what cash we have got available. So if anything's been swept into the cash sweep account here, it will go there. If not, it will go and see what funds we have put in any savings account, a current account or a savings account. So that's what it's doing here. It's using up that savings account in the year after retirement when the income stops to fulfill or try and fulfill as much of those expenses as it can. Now, I call this account the rainy day fund, so I really don't want that happening here. So to edit something I've already put in, I'll go to savings and investments, and I'm going to click on that rainy day fund. And what I will now do is go and do something and edit my withdrawal limit. So the withdrawal limit at the moment is as needed. So basically it's taking funds out of there when required. I'm going to edit this. There is lots of options, but the one I'm going to do is do not allow. Then I'm going to click done. And what you will notice now is that we're not using those funds anymore. So the withdrawal limit is a really, really useful thing to have. I'm going to add a few more things now, some investments accounts and everything like that. So let's get to the investment account. So add in plus button and an investment account. And I'm just going to call it there, general investment. I'm going to change. You can see here from the drop down, they've got lots of options, trusts, bonds, etc. in here. I'm just going to choose a very plain and simple unwrapped investment. And I'm going to put in the current balance of it all. Now, with everything other than, say, your main residence and an ISA, it's always important to put in a purchase value. Now, I had the inline help switched on, which I urged you to do before as well. So this is where you can see where it comes in handy. If you clicked on purchase value, it brings up a little explanation of what we mean by that. So I'm just going to put a purchase value in here. And I'm also going to put in a contribution. So you can choose different contributions, amount or an amount that's inflated or a percentage of income. I'm just going to choose amount, and I'm going to put in £250, I should say, per month. So you can see that I have the options. Now, when I start putting this contribution in, it reminds me that I need to update the timing. So I can either click here or I can go directly to timing up there. Let's click here. It takes you to exactly the same place. So the software needs to know when you want to start and stop these contributions. So I'm going to start them at the plan start, and I am going to stop them at Jane's retirement in here. And I'm going to click done. Now again, we'll notice that the cash flow will change. You can see it's using those funds. And if you want to double check what's going on, always go to year view. It's really, really good, this year view. We looked at the cash flow before, and now if we move on to say look at the investment, we can see that contribution going in. So it's £250 a month, so £3,000 per annum. You can see that. What you can also do, this just gives us the headline of what's going in for that GIA. If you click on it, expands it, and you can see the detail below it. So you can see the return and the fee, so the net return in there. So, and also you can see the contributions in. So that's what's good, and that's year view comes in really handy there. Now let's add in some pensions. So again, plus button, you'll get bored of me saying that. Pensions, I'm going to put in a money purchase pension, so a personal pension for Jane. I'm going to call it PP Jane, and I will give it a balance of say 200,000 here. And you've also got here the options for contribution. Again, I'm going to put in a 5% contribution, percentage of income here. Let's do 5%. And you've got the option to do an employer contribution as well. And you'll notice from the drop downs, I'll say yes to employer contribution. And then it asks me if I want to match it, or you can do your own distinct amount. I'm just going to click matching. And then, because I'm going to add in one for John, I'm going to go and click save and add another again. So let's do one for John. Give that a balance, say 300,000. Again, I'm going to do a percentage contribution, say 4% in this case, and again an employer's contribution as well, and I'll keep it at matching for this one. Now what I want to show you as well, again in timing, is the fact that the contributions, the software, Voyant will always assume that the contributions are going from the start of the plan up until retirement. Another thing I want to show you here in the pensions as well is the growth. So at the moment, I'm just going to grow by the fixed growth rate that we had in the plan settings. I can change that, I can edit that here, and it will just affect John's pension. You also have the option to grow your portfolio, your pensions and your investments by portfolios as well. Okay, but in this case, I'm just going to leave it here for that and just click on done. Now we get back to dashboard, and you'll notice there's big changes here in the dashboard. So the red, the fact that they can't afford those expenditure, their life goals, or their to afford to spend money on the kitchen, has all disappeared now, and we can. That goal there it is, trackable, saying they can make it 100% of the time there. So that's good. So you can see why I like to do the expenses and the goals first, and then add in the income and pensions, etc. After that. Okay. The other thing I'm just going to point out to you is when you put in a pension, when you put in the money purchase pension, the software automatically creates a drawdown pension ready for when you start to crystallize. Okay, so that's just something to note. So don't think you've done something wrong and you want to delete that. So now, a couple more things to add in. Plus button, pensions. We also have, on top of things like final salary, we add the state pension. So I'm going to add one in for Jane. She's not currently receiving benefits. It gives the start age based on the date of birth you put in there and the amount. Now, the amount's always zero, and you have to put your own annual amount in there because we don't make any assumptions as whether they've made the sufficient contributions or not. So I'm just basing this on £179 a week, assuming they have, so 9,300. And again, I'm going to, instead of clicking done, because I don't want to go back to dashboard, I want to add one in for John, I'm going to use the save and add another. That is such a great time saving thing, the save and add another. If you go away with nothing from today, or just that, then, you know, please do so. It's really, really good. So there, I've added his in as well, and now I can click done. And what you'll see here is the chart, obviously, changing, and then the pensions coming in. Whilst you're new to Voyant, what I suggest you may want to do in dashboard is you can see these three little dots here. Click on that, and then you've got the option to highlight legend. And so this shows you exactly what this color is there. It's, you know, it tells you exactly what the blue means, the darker blue, etc. It's really, really good. Now, a couple of more things to add in, because I appreciate the time, I think I do talk a lot, is that I'm going to add in some property and a debt. So I'm going to add in a property, plus button, property tile. I'm going to have it as joint names, and I'm going to have it as their home. And I'm going to have the market value of 600,000, okay? And this is the growth that 600,000 will grow throughout the life of this plan. It's not a new purchase, and what I'm going to do now is, because that's all I need in here, I'm going to add a debt to it. So I click on link debts, and then I'm going to create a new debt. If you'd have already put a mortgage in, you would have seen that in there, and you can just link it to it. So I'm just going to call it the mortgage, and I'm going to give it a balance of 367 and an interest rate of, let's see now, 1.5%. I'm going to have it as a repayment, and I'm going to say that it's got sort of, well, they tell me that they pay off £1,000 per month. Okay, so that's what I'm going to do. And then I'm just going to click done, because that's just relating to the debt itself. And then I'm going to, so you can see that it's linked. You can edit it if you ever need to. And then I'm going to click done, and that links it then. It adds the property in and links the debt to the property. So again, if we go to the year view and look at the property position there, it shows us that. So that's the year end value against the debt, and hence the equity, and also the debt in there as well. So it shows us the payments that they're making, and also the end of year balance. If we now look at expenses as well, what we also see in here is the taxes and national insurance that both Jane and John are paying, the contribution that Jane is making to the GIA and to her personal pension, John's contribution to his personal pension, the household expenses, the leisure, and the mortgage payment as well. So one big tip is, if when you're putting in the expenses, always make sure it doesn't include the mortgage payment, because when you add in a debt, we create the mortgage payment for you and it will show up in expenses. Okay, so that's how you enter things, and it will show you a summary of the charts up there. But to get the charts on a full screen, we can now move to Let's See. And I'm going to go at the moment to single chart. So there it is on the full screen. Lovely view for your clients to see when you're presenting to them. Now, from a presentational point of view and a tip for there, can you see, because I've got the legend on, you can see the option for hide all. If I click on that, it removes all of those inflows away. So again, it shows me this expenses profile. So we can then go through is what is in this plan to help your clients meet their expenses. So again, this is something you can do for your client. You can bring in whichever order you want, things like the employment income, your savings and investments, your state pensions. You can do it all like that and bring them in for your clients so they can see exactly what's going on. What you can also do here, you'll notice that I'm in the cash flow chart at the moment, but there are other charts you can move to as well. So you can go to the assets, expenses, etc. Now, because AdviserGo has also been designed for tablets and touch screens, you can also move through the charts by clicking on these arrows either side of the charts as well, which is quite a handy thing to do. Okay, so in this plan, if they don't spend their surplus, we talked about that surplus where the blue bar goes over the black line, they can actually meet from income that kitchen they want to put in, and also things like the car purchases that they want to have every 5 years. So this assumes that the expenses you have entered into this plan are really realistic for your clients and that their employment earnings increase slightly over the next few years. So they can afford to pay for that kitchen and they can afford to pay for the, say, for the car out of that. So even from the first year of the plan, Voyant can be used as a tool to kind of bring in that discussion around what are your expenses? Do you have any money left over at the end of each month? If this is correctly, your surplus, how does that feel? If it doesn't feel quite right, what do you currently spend your money on? Do we need to really go and perhaps reassess your expenditure, maybe more discretionary expenditure in there, and so on? So we're just in the single chart here and the details. What we can also do in the Let's See is move on to the dual chart as well. So let's have a look. So this basically, we can choose one chart on top of another. So we can see that, yes, they can comfortably afford what they want to do, but let's have a look at the assets below it. Does this actually mean that by the end of the plan, they've got no liquid assets at all to play with? But in this case, if I hover over the final year of the plan, they've got plenty in the way of pensions and savings, as well as the non-liquid of their house to fall back on. So that is the base plan. I'm just going to keep you 2 more minutes, if that's okay, because what I want to do now is I want to show you how to create a what if. So in this plan here, this is the base plan, this is where they are now, but they're looking at this and thinking, this is not bad. Do you think we can retire a bit earlier? So that's what I'm going to show you very simply how to do now. So in this case, what we're going to do is create a what if. So you click on what if, I'm going to give it a name, and it is retire later. I'm just going to click on create plan. So all that this does is reproduces the base plan at the moment, but in this plan here, because I'm in retire later now, I can amend this plan and it doesn't affect your base plan at all. So what I can do is I can go to the timeline and I can go on to John's retirement, for example, and edit that to go to age 60 and then click done and move his retirement forward. I don't have to go into timeline to do that. I can go into dashboard. I can click on Jane's retirement, like I showed you before, and edit it directly from there, which might be quite handy. And this changes the plan straight away. So if I click on details, you'll see that the employment income finishes earlier. But what I can also do now is I can go to Let's See, and I can go to compare plans and chart view, and I can now compare one plan with another. So I can use the cash flow chart, or I can also go into assets as well and compare those charts. So that really is a run through on general data entry. I hope you found it useful. Or if you are in a plan, what you can do, and you need help with a plan, is if you click on the name of the plan and then click on request support, you can contact us that way. I hope you found this useful. Thank you for watching and listening.